Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep going with our analysis of the euro currency. So based on the performance of the euro currency yesterday, you could see why we talked about avoiding taking any short position by far, starting from our weekly report that we have prepared in the weekend. It's just because we have the bullish pattern on the weekly chart, and until it's valid, it is not safe to consider taking the short position, as it could work and market could jump above the 108 area, so taking out of these lows at least. So it may be even more extended action by triggered by some events or speeches from the central bank representatives or something of that kind, statistics. But anyway, you could see that the euro currency, if we would suggest that we would like to take the short position, the performance that we see on intraday charts would look like a bit surprising to us, and that explains why it's better to not go against the pattern that we have on the higher time frame, which is weekly. And we're following the same context, same idea right now, so we're not considering taking short position, and talking about situation on intraday charts, and maybe some of you already have long position or somebody would like to take it, and we just taking a look at the target. On the overall setup that we have. So first of all, on the daily chart, trend has turned bullish on the euro currency. Right above the market, we see strong resistance area, which is 106.23, 106.68. And we're coming to a really tough session because today we will get multiple PMI numbers, which will be important. Today will be the Jerome Powell testimony, so some other events, so significant volatility might be around this area. So if we would like to take the position, or if you already have it, it makes sense to consider what the nearest targets we have. And if you'll take a look at the follow time frame chart, let's take a look. We have the initial ABCD pattern that we already discussed. Its OP stands 106.84, and based on the recent performance, so you can see that yesterday, although downward action has happened, so we talked about market hasn't completed the ABCD retracement, stop at the middle of it and turns up. This is potentially bullish pattern, so potentially bullish performance when the market is breaking the ABCD shape, turning to some triangle consolidation, something of that sort. It's potential to suggest that upward action has good chances to continue, if of course no external factor will intrude in the process. So 127 extension stands 106.44. So this is first butterfly target. Inability to complete this ABCD pattern tells us that this recent swing that starts right here and downward stops there becomes important technical tool that we could use. And for example, market with this kind of the performance in the current situation, to keep the bullish context valid, it should not drop below it. So it should not erase this type of action, turning down again and breaking these lows. This is important sign. Although theoretical invalidation point stands below this area, because this is the butterfly, this invalidation point, and the C point of the ABCD pattern. I'm talking just about the fallout time frame chart. On the weekly chart, the invalidation point below these lows, because this is lows of the grubber that actually we're dealing with. But appearing of these two patterns, actually not the patterns, the first pattern and second is the swing, gives us chance to maybe use another points for stop placement on intraday charts, and to not take too much risk hiding stop just below the weekly pattern. It's too extended for intraday performance. So targets we have, patterns stands in place. Now on the hourly chart, you could consider a few levels where you theoretically could think about taking the long position if you would like to. Personally, I like the two levels of the most resting swing. because here's market stands in extension, and it should not, as I said, drop below them and taken out of these lows. So you could consider taking position either on this level or on that one with initial stop, for example, below these lows. Once market starts bouncing up, you could move stop to the break-even or just below the confluence. This is one of the approaches. You could choose different combination. You could hide stop initial below this area, because actually it's not too far from it, but it's more well, technically correct to place stop below this area, just because this is an validation point of the big butterfly right here, and it's also 618 support. So from technical point of view, this of course will be more correct to place stop here. But some traders very often take position here and place stop just below the confluence. This is another approach. It depends on your trading style, assets that you have on account, and trading position that you take in. So there's multiple reasons for that. But anyway, this is a few levels that you could consider for taking the long position with the possible targets that we have discussed. So that's actually what we have in euro currency. Let's see how market will pass through the PMIs and what Jerome Powell tell today in the evening.